Welcome back to my YouTube channel. In this video I want to tell you about top 10 worst insurance scams in history. So watch the video till the end for more information. In the UK alone in 2020, 107,000 fake insurance claims worth £1.2 billion were uncovered by insurers. That equates to a new scam being uncovered every 5 minutes, or in other words, 300 a day. When it comes to insurance fraud, there is very little the industry hasn't seen. We take a look at some of the most bizarre and downright ludicrous claims that have been made against firms in history, and how they were rumbled. Titanic conspiracies. The greatest maritime tragedy of the 20th century was also marred in rumors of insurance fraud. In 1912, while the final touches were being added to the magnificent and unsinkable Titanic, her sister ship the Olympic suffered a slipped propeller blade. This required the vessel to return to the Harland and Wolff shipyard. In an attempt to speed up the ship's repairs, the Titanic's propeller shaft was used as a replacement, therefore delaying its maiden voyage by almost 3 weeks. But after the Titanic's tragic sinking, this seemingly innocuous event was enough to set the rumor mill in motion. That the Titanic and Olympic were part of a huge insurance scam, and that it was actually the Olympic that sank and not the ill-fated Titanic. Food for fraud. In 2020, 49-year-old Jacqueline Mass was sentenced to 18 months in prison for mail-in fraud. The Hampton NH native was found guilty of making false food poisoning claims and blaming it on restaurants. Mass lied and said she had fallen sick from unfit food in 12 letters that demanded compensation amounting to $400,000. Insurers paid more than $206,000 to Mass and unknowing family members, who were in on the racket and also claimed they were poisoned. To back up the bogus claims, fake medical records were produced that stated Mass had been made seriously ill after eating the food. The letters also demanded that the targeted restaurants reimburse Mass for her medical expenses, pain and suffering. Home fires burning. Another home insurance fraudster on a mass scale, Patrick Wayne Brannan of Texas torched and flooded his way to $1.7 million of insurance claims. Brannan led a fraud ring that operated by buying cheap, old houses and setting them up with straw buyers. The homes were falsely insured for amounts way above their actual value, along with content that never existed. Then, a carefully planned series of disasters would befall the properties from burst pipes to fires. Burglary claims were also filed against the non-existent content, and when the fraud was uncovered, Brannan was sentenced to 78 years in prison for the sheer volume of crimes he'd organized. The sentence will never be served as Brannan died in July 2020. Medicare mayhem. Dr. Jacques Roy of Dallas has gone down in insurance fraud history as the man who billed Medicare $375 million for treating healthy people. Roy lied on claim forms by falsely billing for treatment for the supposedly frail, homebound seniors on his books. Many of the claims Roy made were for homeless people, or those who were perfectly hale and hearty. Reports suggest Roy's operation generated hundreds of false claims on a daily basis before his deception was revealed. Buy low, claim high. In 2018, the 72-year-old Florida native Verdon Taylor was found guilty of insurance fraud on a mass scale and was sentenced to 40 years in prison. Taylor had purchased over 30 mobile homes, second-hand cars and rental leases, which had all resulted in accidental fire claims being filed. Often, there were only weeks or days between the claims being made, and Taylor and his accomplices were found to have defrauded insurance companies to the tune of over $1 million in the arson for cash claims cases. Darwin's death. In 2002, John Darwin, a seemingly respectable British teacher and former prison warden, faked his own death by paddling out to sea in a canoe and promptly disappearing. The collaborative plan, which was hatched by Darwin and his wife Anne, resulted in a large-scale search for Darwin's body, of which no trace was found. But 4 years later, all was revealed when the couple reappeared together in a real estate social media post in Panama where they had both moved to start a new life, and the fraud was rumbled. Darwin had planned his own disappearance to claim £679,000, which allowed the couple to pay off their £130,000 mortgage and reinvent their lives abroad. But their deceit cost the couple dearly, because on the 23rd of July 2008, John and Anne Darwin were each sentenced to more than 6 years in prison. Darwin split with his wife after their prison sentences and now lives in the Philippines and runs a business with his new wife. Jewelry foolery. Sometimes the lure of an insurance payout is too much to resist, even by the most seemingly respectful of citizens. In December 2008, two owners of a jewelry business in New York devised a plan to stage a jewelry heist from their own store. Atul Shah and Mahavir Kankaria hired two men, disguised them in Hasidic Jew costumes and faked a break-in at their own shop. They then poured drain cleaner into their security cameras to destroy incriminating footage and then filed $7 million claim with their insurer, Lloyd's of London. The deception was uncovered when detectives salvaged footage from the tapes revealing the men removing the jewels from their own safe 2 hours before the break-in. Slippery business. A gambling addiction can be a slippery slope into heinous debt. But one sly pensioner decided to use fake insurance claims to cover her casino catastrophes. When 72-year-old Isabel Parker ran out of funds to support her addiction, she faked no less than 49 slip and fall scams at supermarkets, department stores, supermarkets, and off licenses in 3 U.S. states between 1993 and 2000, newspapers reported. A fraud investigation unit revealed Parker had 47 fake IDs and 11 different addresses to file her claims, which totaled more than $500,000. After being convicted of 20 counts of insurance fraud in 2003, Parker served a 4-year sentence under house arrest. Fantastic. Sometimes genuine bad luck can lead to a series of extraordinary events. But a freak cooking accident raised instant suspicion in the underwriters department of a Delaware insurance company after a man insisted that a saucepan mishap had caused his home and convertible to go up in flames. According to police reports, Nicholas D. Puma claimed he'd attempted to put out a saucepan fire with a cloth. But the cloth caught fire, so he took the pan and threw it out of his front door. Most unfortunately, it landed on the backseat of his convertible. As he attempted to remove a second pan that had also, reportedly set on fire, he tripped over a box, and the pan landed on a leather couch, setting it alight. D. Puma then claimed he ran outside to get 2 hoses, but there was only one there, so he attempted to put out the fire in the convertible, rather than his house. Predictably, he was rumbled and was ordered to pay $37,997 in restitution, and was then sentenced to 5 years in prison for attempted insurance fraud. 4 women and a funeral. When 4 women from California decided to carry out a life insurance fraud crime worth $1.2 million, no one could have predicted the lengths they would go to create the illusion of truth. According to FBI files, the unfortunate deceased man in question, named Jim Davis, never existed. The 4 women were Jean Crump, 67, who conveniently worked for a mortuary, Faye Schilling, 61, Barbara Ann Lynn, 64, and Lydia Eileen Pierce, 35. Seeing an opportunity to work the system, they took out a policy under a fraudulent name, faked Jim's death, and even his funeral, which they paid actors to attend, before suspicions were aroused and an investigation was opened. Unnerved by this, the women then exhumed fake Jim's coffin, which contained a mannequin and cow parts, to weight it realistically, and arranged for it to be cremated. Eventually they were caught as a result of a poorly executed paperwork trail. The handyman. In South Carolina in May of 2008, a court heard how a 1, Gerald Hardin, 34, chopped off his friend's hand to cash in on a dismemberment claim worth $670,000. Hardin reportedly used a pole saw to deliberately remove the hand of his accomplice, who then filed a claim against his home insurance policy as well as 3 accidental death and dismemberment policies. The unfortunate participant was the mentally challenged Michael Weaver, who reportedly trusted Hardin and viewed him as a father figure. He agreed to have his hand chopped off so that Hardin, a drug user, could then claim compensation for the accident, on 6 separate policies. When the illicit truth came to life, Hardin served 5 years in prison for the crime. I hope you like this video very much. So subscribe to our channel to get more updates like this. See you in the next video, in which we will bring you a new information which has become to be very important for you. That's why it is very important for you to watch the next video. Thank you for watching. Subscribe, like, comment and share.